Hello, good day, and welcome to today's daily education here at Forex Academy. I'm your host, Robert Blackwell, and have the pleasure to walk through today's daily educational video. Before we do so, please consult the following disclaimer. There is risk involved trading in financial markets. In the content of today's particular daily education, we will be discussing trading markets with volatility, i.e. looking at bulls versus bears within short-term volatility, because there is fantastic opportunity trading certain market conditions. You just need to know how to exploit those conditions. Let us move forward to the trading platform. And again, one of the main focus points is as markets move, guys, some markets tend to trend whilst other markets tend to show short-term volatility. Perhaps you see a trading range. Perhaps you see those markets trade horizontally for a period of time. Those markets as well provide you with consistent opportunity if you know how to trade them successfully. And you have to develop your appreciation of volatility with your risk management in terms of your trade size and your expectation on profit for trade, which is absolutely paramount to your success. This type of trading strategy will, of course, be very different to a long-term trade in perhaps a trend where you're looking for $300 or $400. If you're looking to involve yourself in short-term volatility, I would suggest certainly make more of those trades, smaller trade size, identify the market in question, and look to capture 10 euros here, $10 there, whatever it may be, smaller trades in and out of the markets and developing a level of consistency as such. So one of the key questions or observations when trying to identify these opportunities is which markets are available to you to study and to trade such a trading strategy as such. So let's look at the dollar index. Of course, you can see a very well structured trend to the upside. That doesn't necessarily show us a level of volatility in the short term to look to get in and out of markets. The euro dollar is the same. Again, if we look across the cable markets, it's the same type of structure, trending down to the downside, now bouncing up quite a bit in the short term. The euro pound, however, you can see there's volatility here. Now, what I want to suggest is look how this price action has traded in the medium term. Okay, guys, so I'm going to put two levels of support here, almost three in this market here, where we can suggest there's trading opportunity. So effectively, in a very long period of time, although there is one outlier that we could maybe suggest, and I'll just highlight that on chart here, as the market trades down, you may look to uncover this as a bit of an outlier in terms of where the market trades right here. So just within this market, the market does break some sort of support and look to give you a false breakout signal. When this comes back into line, this period of here and within our price range here, there's so much opportunity available. And again, as this starts to squeeze in, guys, this level could tell you that you might actually look to trade those profit opportunities. But again, that you don't have an overall perspective of a long-term trend, or perhaps you don't have a directional bias in the market, does not mean that you can deliver some trading opportunity for yourself. Let's zoom in on the relative price action. Again, it really paints a picture that there is some volatility in this market. So again, this is over perhaps the last month's price action here. We have opportunity. We can't forego potential opportunity, of course. As a Forex trader, yes, if you're looking to develop your idea of trading a market, you are looking for strength versus weakness. Although as this market trades, they've both been inherently quite weak over the past month. That could tell you that there's no directional bias there. I'm going to exploit those intraday moves. Okay, so how can we look to identify this opportunity? Well, first of all, we can use our test on volatility, which of course is a technical indicator. We can look at identifying the overall level of volatility in the market with the average true range. Okay, and we'll choose again, perhaps we'll choose a 14-day period just to exploit shorter time periods in terms of assessing the volatility. Okay, so we can see that even though the market is trading sideways, there is a higher level of volatility over previous trading ranges in the short term. So we're at a kind of larger extent of volatility. I'll just highlight this with our ATR in terms of the short-term trading opportunities at nominal levels. Okay, so we're slightly above average straight across our average line here of our ATR volatility index. Now, one way you can assess the overall momentum in this market is by looking at the interactivity between bearish and bullish activity. And again, it's another technical indicator that I like to include in my short-term volatility trading. So I go to indicators here and I go to, let me see, it's an oscillator, I believe, bear power there, and we'll select bull power as well. And again, you want to remain consistent, guys, so you'll change your period to the same period of 14 days trading, okay? And we'll just make that slightly larger so we can see. Now, what this is showing us is the level of bearish activity when the bears are effectively in control versus the bulls. We'll go to indicators again, and we'll look to quantify that as well with the bullish activity by looking at quantifiable bull power. We'll select the same 14-day period, and again, try to observe this. So now we're starting to use some technical confluence just to look at actual trading opportunity again, just in the very, very short term. We see a trading range start to trade from around the 88 level to the 86.94 level. And again, you could use more slight technical analysis to say, well, there's more of an aggression to the downside. So is there opportunity to simply make these trades? Of course there is. Again, consult the term of the trade. And what we're going to look at here is the ATR in relation to bullish and bearish activity. So when we zoom on in this relative price action here, what we can see with the bearish activity, guys, is that as the bears were in more control here, we can actually see that they're starting to take over in relative price action here. Okay, right below the 0 point. And again, bullish activity is right here, again starting to just quantify. So this in between tells us that there's a level of bull power versus bear power in this market as the volatility starts to rise in the very short term. You can see it's just actually just squeezing up with the price action here. Okay, so this could lend itself to actually trading such opportunities again in the short term. If you'd like to trade such an opportunity, you can look for an example here. What we'll actually do is look to trade this example here where we don't have any sort of momentum. We can see that the bullish activity is just starting to squeeze up. And again, we'll take a very short outlook on the trade. So what I like to do is just delete these indicators just so we can observe the overall price action. Just right click on the indicators themselves. And again, we'll look at our price action here. What we could look to do is say there's a bit more bullish power in relative price action. Again, as supported with today's candlestick. Again, we're right at the price channel here. Just in terms of looking at the volatility, bulls versus bears, let's make a trade. And again, we have to be quite consistent with the level of risk we will look to trade here. So we'll simply look to buy out market, and let's say we place our stop loss in around today's low. So again, we'll go for a stop loss of around 0.8, perhaps 7.5, just below the market today, and we'll look to buy that market. So that is a relative point. Again, we can look for a simple risk reward of 1-to-1 on the trade to look to bring it up to nominal levels. Again, we're kind of in the middle of a range here, but the market is just showing us a few pips to the upside again. And again, the stop loss on the trade is only $4.83, while the profit is in around the same. We have slightly a larger profit. And again, you can manipulate this as the market looks to trade. What you're simply doing is that you're only trying to grab 30 or 40 pips when there's some volatility in the market. And again, you can see overall the 14-day period, there is volatility in the market, allowing yourself to heighten these and get involved in the short-term trades. Again, this can be one complete trading strategy you'd like to add to your arsenal of trading skills. Perhaps you're a technical trader in the long term, but you have 1 or 2 days off where you'd like to get involved in the markets in the short term. This is a strategy I use intraday for those markets that aren't really going anywhere, but that I know that I can make profit with actually adding a very little risk to the trade itself. And if I can place perhaps 6 or 7 of these trades a day, and I'll perhaps take 5 winners and 2 losers, well, effectively I'm going to make 30 euros for not a lot of risk in the market. And again, you're always trying to grow your account for 30 euros here one day to the next from short-term trading. So that's just one opportunity. Again, what we looked at is a market that isn't showing any direction in terms of directional bias. What we looked at is identifying that there is actual volatility in there, but that the market's not going anywhere over the medium to long term. And I'm just trying to capture some profit opportunities. You can see this market starting to trade up, and I'm just going to open my terminal here. I'm all but 27 cent on side, and hopefully this market shifts up. Just looking at a contrast really to the bearish activity versus the bullish activity, starting to show the bullish activity starting to tick up against the bears there, and looking for a very short-term volatility opportunity. So that brings us to the end of today's daily educational webinar. Thank you very much for joining us here at Forex Academy. We'll see you next time. Bye for now.